It's almost 2026 and it's time to review what are the best picks for our portfolio and which companies are going to provide us outside returns for the next year. So let's get started. Okay, so today we are going to review my top 5 picks for 2026, which provides very good downside protection, but also huge upside in this year. The first one that we are going to discuss is PayPal. So I think PayPal is one of the best opportunities in the market today, given that it is so cheap and it is so overlooked by the market. So basically, I think that today PayPal is basically one of the cheapest large cap in the market. So if we look at the valuation of PayPal, so what's our thesis for PayPal? So it's actually twofold. The first one is that we are going to see a reacceleration of both revenues and TMS dollars and also EPS. So basically, a lot of people are actually glancing over the fact that yes, branded checkout is taking more time to actually deliver the growth that it was supposed to deliver, but we are going to see more growth from Venmo, from Braintree, sorry, and for all the other initiatives that PayPal has today, with ads, with stablecoins, agentic commerce, PayPal Fastlane, for example. And so definitely, I think that the market is actually sleeping on the fact that PayPal is going to show some reacceleration of growth, and we might even see actually 10% revenue growth in 2026 at some point. So I think that the first thing, and this is going to translate very strongly in terms of EPS growth, because I think that PayPal is also going to deliver some operating leverage in 2026. So we are going to see also further net income growth, and we're also going to see very strong buybacks in 2026 if the stock price continue to be at this level. So I think that PayPal is going to continue in 2026 by delivering around $6 to $7 billion of buybacks or share repurchases, which is going to translate of around, I would say, reducing in terms of share count of around between 8 to 10%. So I think this is pretty strong, and we are going definitely to see, I think, EPS growing between 15 and 20% in 2026 for PayPal, and the market is going to actually wake up to this fact. And so this leads to our second leg of the thesis for PayPal, the fact that the valuation today is almost absurd. If we look at the forward price for operating cash flow of around 6.52, which is actually the lowest that they have ever been. If we look at all the other metrics, the price of free cash flow, PayPal is the cheapest it has ever been. It is very, very cheap compared to both Chinese and American equities. So I think that there is a huge disconnect about what PayPal is and the valuation that the market is giving it. And I think that with this reacceleration of growth, the market is also going to revalue PayPal, and we will see also some kind of multiple expansion. And so definitely what we are going to see is that something around 20% or growth in terms of EPS. And on the other side, we're going to see a repricing of PayPal of around at least 30% in terms of multiples. And so all that together, so I think that we could very easily see a repricing of PayPal of more than 50% in 2026, with a price target by the end of 2026 of around $90. This is not very impossible, because this is the price that PayPal was actually 1 year ago. And definitely we will be able to see a turnaround, especially if Alex Christine is going to be able to deliver all these growth levers in 2026. My second pick, and this is not in order of preference or in order of probability, but my second pick is Jelly.com, and this is another very cheap stock. So basically, Jelly.com is also trading even cheaper than PayPal. So very recently, J.com has been doing a lot of investment, especially to get into instant commerce, and this has actually destroyed their profitability. And if we look at all the different metrics for J.com, but what we are going to see in 2026 is that they are going to come back to normalized figures and normalized valuation, normalized profitability metrics. And a lot of people are going to be surprised that actually J.com has not been killed by this introduction into the instant commerce and delivery market in China. And they are still actually a pretty good business with a lot of scale so in China. And J.com is going to still continue to benefit from the stimulus from the Chinese government. And we are going to still see strong growth numbers in 2026, something around 7 to 10% definitely for J.com, which is going to benefit from a return in terms of consumption, so in China. And I think that the market is definitely sleeping on that. And alongside this return to growth for J.com and this return especially to profitability, with the fact that they're going to invest a little bit less into this instant commerce now that they have been able to build some kind of market share for themselves, So we are definitely going to see a repricing, especially if we look at the price to sell. So today the price to sell is around 0.2. So we say that historically the price to sell was 0.1, but actually it was 0.6. And so definitely what we are taking into account into our model is the fact that J.com is going to be repriced by the market from 0.2 price to sales to 0.4. So basically here we have actually like a multiple expansion by almost 2x. Um, and which is going to come alongside basically so some growth around 10% in terms of revenues, and we're also going to get some shareholder return from dividends and from buyback, so from J.com. So if we combine all of that together, I think that we can have definitely a double for J.com in 2026 with a price target of around 200 Hong Kong dollars for J.com. I think that this is something which is quite realistic, especially if the market reprices J.com with a return to profitability and to strong revenue growth on the back of the Chinese stimulus. And so I think that J.com is one of the best opportunity today in the Chinese market. My third pick for 2026 has actually been my top pick for 2025, and this is Alibaba. So Alibaba has had a very strong 2025, actually being up more than 50% in 2025. And so in 2026, I think that they are going to continue to ride the same tailwind that they have been having all along in 2025. So what are these? So the first one, obviously, is that Alibaba is now considered one of the leader globally in terms of AI, and with their Quen models, so definitely they have shown that they are the they have shown that they are the best position, especially in China, for leveraging AI into their core business. So definitely, I think that this is going to continue in 2026, and Alibaba is one of the best company today in China for that. So they are going to have a lot of growth, especially on their cloud revenue, also on their cloud segment. They are going to see a continued acceleration, especially thanks to AI. And the second part is about the e-commerce side. So on the e-commerce side, so we have seen that Alibaba in 2025 has actually also strided into instant commerce, and this has actually weighted a lot on their profitability. And I think that in 2026, this is going to reduce the burden on their bottom line. The fact that they're going to stop all this heavy investment for the instant commerce. So on the China e-commerce and basically the e-commerce side, I think that we are still going to see very strong growth for Alibaba between 7 and 10%. And on the cloud business, we are going to continue to see growth above 30%. So definitely we are going to see a lot of revenue growth for Alibaba in 2026. So double digit definitely. And we are going to see also improvement in terms of EBITDA, in terms of bottom line. And so I think that the market is still going to see Alibaba as a success story. And we are going to continue to see this type of support from the market, and we are going to continue to see multiple expansion for Alibaba. Also today, Alibaba is kind of falsely fairly valued, meaning that because of all the investments, so if we look at the metrics by themselves, Alibaba today has a P/E ratio of around 20, but we have to look a little bit deeper, and especially if we look at the operating cash flow, a little bit like Amazon. So we have a price operating cash flow of around 11 today for Alibaba, and today there is still room for multiple expansion. And what we are modeling today is that we are modeling some kind of multiple expansion, especially towards 15. And so what we are actually seeing is that a multiple expansion of towards 15, so basically 30% of multiple expansion and 10 to 15% of operating cash flow growth, especially coming from their e-commerce and their cloud business. So definitely what we are targeting today for Alibaba is for the stock price to actually go beyond the $200 marks. This is actually a level that they have been trying to reach for the past 5 years, given all the difficulties we have seen in the Chinese equity side. And so we are seeing definitely something between 35 and 50% upside from these levels in 2026 for Alibaba if everything continues as well for Alibaba. My fourth pick for 2026, which is actually a dual pick, which is basically UNH and 11 Health that I have both in my portfolio. So why I think that managed healthcare and these two are going to benefit tremendously in 2026, and that we are going to see a huge upside for this stock in 2026. So basically, I think that all the companies in managed healthcare, and especially UNH and 11th, they are going to benefit from a huge margin expansion. In terms of valuation, I think that in 2025, so there have been a lot of, I would say, volatility in these names. I think that today they are quite fairly valued. We think that the upside actually for these names is not going to come from a huge revaluation from the market. So I think that they are kind of fairly priced today, but what the market is missing is basically that they are going to benefit from a lot of margin expansion going forward in 2026, coming from mainly two aspects. The first aspect is that all these companies, they are going to reprice their 2026 plans based on the cost of 2025, which means that they're going to price them much higher than what they were before. So that's the first thing. And the second thing is that we are going to see reduced costs for these companies, especially on the back of two things. The first thing is that they're going to control expenses much more drastically. They're going to review a lot of their different plans that they're offering, and they're going to cut everything which is not profitable for them. So we are going to see the medical loss ratio for these companies being much lower. And on top of that, I think they're going to benefit also tremendously from the fact that a lot of drug companies and are going to lower their prices. Especially, we have seen that with Eli Lilly and Novo Nordisk, especially in terms of GLP-1 drugs. And so what we are seeing that all these major healthcare companies are going to benefit from lower drug prices, especially pushed by the current administration in the US. And so definitely. So what we are seeing, especially for UNH, so what we have actually said is that we are targeting something around 25 US dollar of EPS for UNH by 2027. And so by the end of 2026, so what we are seeing is that definitely we can actually have something around $25 of EPS price at a forward P of around 19, which actually give us a target of around 480 and 500, which is basically a 50% upside going forward. And we have a very similar situation for 11th Health. So I think that the upside is slightly more limited for 11th Health. And we are also seeing a 40% and the same type of price target of around 480, 500 also for 11th Health by the end of 2026, especially if they benefit from this repricing. And we are actually seeing in the numbers margin expansion for both of these companies. So definitely a very good pick. And I think it's also a good pick because it's a defensive pick, meaning that if we are having a recession in 2026, the downside for these names is very limited and they're going to support our portfolios very, very well. So my fifth best pick for 2026 is actually Amazon. I think a lot of people on X and on the internet are actually quite bullish on Amazon despite it being the least performer on the Mac 7. But I also think that actually Amazon is actually well positioned to actually have a very strong 2026 years, especially because like all the narrative that we have seen in 2035 around Amazon are actually turned to be not really true. And definitely Amazon is going to benefit from a lot of different trends going forward in 2026. So the first one is basically, I think that on the cloud business, I think that this is the most obvious. So we have seen a reacceleration from the AWS business. And definitely this is going to continue because the demand for AI is actually quite still strong. And we have seen that. And the hyperscalers are the ones benefiting tremendously from this very strong demand. Also, we have seen that Amazon has been able to actually roll out all their Trainium chips, and all they are also going to benefit by providing much cheaper, much more efficient options, very similarly to Google, to all the different customers. So definitely, I think that AWS is going to continue to perform very, very well. We are going to continue to see very strong growth on this business, and this is going to actually continue to actually support Amazon and the Amazon stock price. But I think that the most important and the most change of narrative that we are going to see in 2026 is that people are going to realize that all the investment that Amazon has been doing are not only for AWS, but also a lot of it is for physical AI and improving their retail business. And what's going to happen is that their retail business is still going to continue to grow. We have seen Amazon going into a lot of different verticals, and they are still very, very good and very, very efficient to grow their retail business. But the most important thing that we are going to see in 2026, the beginning of the great margin expansion for Amazon. We are going to see Amazon being much leaner, also a lot more automation. And this is actually where the margin expansion is going to come from. And I think the market is going to be shocked by the basically the profitability and the cash flow that Amazon is going to generate in 2026, especially if they cut down a little bit on the investment. And if we are actually going into the second part of the investment cycle, where the investment is much less, I would say, strong in terms of intensity. And so we are going to see the real profitability of Amazon. And I think that a lot of people are going to be surprised by the cash generation power of Amazon. And so what we are seeing is that on top of the growth, I think that Amazon is going to be able to grow operating cash flow by 20% in 2026 on the back of their three main businesses. So we say like AWS, ads, and the retail business, especially through margin expansion. So operating cash flow is still going to be pretty strong. Um, and we actually envision the operating cash flow growing by 20% in 2026. And on top of that, so we are going to see the market recognizing the power of cash generation of Amazon and reprice the business from today a 14 price operating cash flow to something a little bit more in line with the historical valuation, which is around 19. And so this is going to deliver a 30% also upside just coming from multiple expansion. And so if we combine all of that, so what we could see actually in 2026 and why Amazon is one of the best pick for 2026 is that we could definitely see an upside of more than 50% in 2026 for Amazon. And we think that Amazon is going to be one of the best performer in the Max 7 with a price target of around 350 during 2026. This is basically the gist of why Amazon is one of my best pick for 2026. So everything we have said in this video is actually obviously not financial advice. This is my opinion and this is for your entertainment. But basically, so if you're interested in other ideas like this one and other opinions like the one I've presented today, so please check my other videos, please subscribe, and I'll see you in another one. Bye.